What's up, YouTube? What's going on, CCI family? It's your main man back with the game plan on a Monday. Yeah, I know we just dropped that new episode yesterday on Sunday, but I had to get in here real quick because today was President's Day, so the market was closed. Tomorrow, we're back in that frying pan. So I wanted to jump in here and let you know a few things that most beginners get wrong. You know, why some of the best moments in your investing journey happen when the market is red, when it's shaky, or when it's correcting, as they say. Okay, now I know it feels kind of counterintuitive, but this is the exact moment when disciplined investors really start quietly building their future. So let's talk about the psychology of these red days. Okay, when the market dips, most people start freezing up. Okay, they think red means danger, but often it means discounts. Okay, think about it. Nobody waits for prices to go up before they go and buy that new car or that new home. Yet in the stock market, people do the exact opposite. The truth is, down markets are where long-term investors get their best entries from. You feel me? Not because they're trying to time the bottom, but because they're buying when fear is high, which is when prices are more reasonable. Now, of course, you might ask, why is the market taking this dip right here? Well, unfortunately, there's a whole collage of reasons. One being the push against AI, you feel me, to try to slow that roll down. However, AI is not going anywhere. You see that, you know that, okay? The next issue that I believe is always a new Fed chair stepping in. Okay, and you'll notice anytime a new chair steps in, the market does what it normally does, which is starts testing them. Okay, investors want to know automatically how will they handle inflation, how aggressive they will be on the new policy rates. Okay, how they communicate uncertainty. Okay, and in this testing period, almost always it creates volatility. Not because anything is fundamentally wrong or broken, but because the markets hate the unknown, period. Okay, so what do we get? We get a correction. We get pullbacks, reset in pricing. And that's exactly what we're seeing right now. So one thing you have to do is stop looking at these corrections as red flags. Okay, corrections aren't crashes. They're the market taking a deep breath. You feel me? Historically, corrections happen multiple times a year. And every single time, long-term investors who stayed loyal, stayed disciplined, they came out stronger every time. So when prices pull back, valuations start normalizing. Companies that were too expensive become reasonable again. Okay? And if you're just starting out your investing journey, this is when you build your positions at prices that once the market starts stabilizing, they won't be available again. Now, on the flip side, if you're a trader, this environment can actually be like your playground. If you're smart, volatility means movement. It means opportunity. Look, the S&P is coming down to levels where traders have been watching for weeks. They've had breaks, retests, failed rallies. These are all setups. But again, discipline is everything. No chasing, no guessing. Let the chart come to you. So here's the truth. Markets are going to test new leadership. They're going to test investors, and they're going to test your emotions. But the macros only control the narrative for so long. Eventually, fundamentals take over. Okay? Innovation takes over, earnings take over, and the people who stayed calm during the noise, they're the ones who benefit. So if you're just starting your investing journey, don't let a little red scare you away. Okay? Let it educate you. Let it give you better prices. Let it be the moment that you look back on and say, you know what, that's when I started, and I'm so glad that I did. All right? Now, we're going back to work 9:30 a.m. tomorrow. Be ready. Until then, this is Chump Change Investments, helping you build your confidence one smart decision at a time. Okay? See you all Sunday. Peace.